Welcome to our compliance conversations hosted by Insurance Licensing Services of America and the Spot on Insurance podcast. Today's topic is specialty licenses, TPA, MGA, and RPG. We have a host of professionals here who know the business inside and out. We're going to talk to you about it.
Man, thank you guys for joining us on this session. This is going to be about 1 hour. It might be a tad bit more, but if we keep Joyce from talking too much, we might be able to wrap it up in an hour. We are streaming live on LinkedIn, Facebook, Twitter, Periscope. You can write your questions in the Q&A section, and if you just want to say hello, hey John, I like your glasses, you could put that chat. So who do we have on board today, Ted?
Well, teaching us all about the intricacies of these licenses will be John Moskal, Vice President of Business Development, WaterStreet Company.
If you'll just wave your hand.
Robert Tomilson, attorney at Clark Hill. And we got Joanne Delgado, Vice President of Education and Compliance, who's with often Surplus Lines Association of California in the house. Tammy Brewster, Supervisor of Limited Risk Entities Division, Georgia Office of Commissioner of Insurance. A first-timer, welcome.
Georgia in the house.
Where was I now? I lost. Oh, Jeff Baughman, Producer Licensing and Oversight Program Manager, Washington State Office of the Insurance Commissioner. We've got Kristy Roberts, pretty headsets right there. Licensing and Compliance Manager at ILSA, Stefanie Cantu, Licensing
is not going to be joining us today.
I just found that out just now from her.
So Joyce, today we're going to be chatting about specialty licenses, TPA, MGA, risk purchasing groups, and you know, from our standpoint, from ILSA's standpoint, we get a lot of times calls from organizations and you know, they're talking about they want these licenses or registrations, and often it's not clear. It's not as clear as P&C and Life and Health how to get the licenses. And the other issue that we face is a lot of times organizations don't even know what type of license they need to get. And a lot of times that state doesn't even offer that license or registration. So I am excited to get into this. And I know our attendees are going to learn a lot, so take it away, Joyce.
Woohoo, all right. And actually take it away, Tammy, because I'm coming to Tammy first. Tammy Brewster, she's going to talk to us today about TPA registrations. And she is with the state of Georgia, so of course anything she says is pertinent to Georgia TPA. But I will say, I'm going to try not to talk much. I promised I wouldn't because we're on a time crunch. But one of the first things that caught me off guard about TPA, you know, licensing or registration was the fact that it's called in many states a certificate of authority. And that, I mean, it lost me immediately because in our world, certificates of authority come from the Secretary of State. That's where we're at. So to hear a TPA license or a registration called a certificate of authority, immediately the first time I came across that, I was so confused. And I'm sure that can happen too, you know, with some of our attendees today. So Tammy, if you would first start us off with just a general description of what a TPA is, what they do within the insurance space.
Okay, I'm glad to be here with everyone and kind of give y'all some guidelines for what happens here in Georgia. As far as for TPAs, they are entities, business entities who directly and indirectly handle claims, premiums, any type of fees, collect fees, adjust claims, settles claims, any type of investigation, examinations, as well as overseeing the administrative procedures for companies. And that would include all company types, whether it's P&C, Life and Health, Workers' Comp, ERISA, or anything. That's basically what we defined it as.
All right, sounds good. The next question that I have for you is that Georgia is one of quite a few states that require a biographical affidavit as part of the licensing process. Can you talk to us a little bit about what the biographical affidavit is for, what's included, who needs to complete one when they're making application?
Okay, for the TPAs here in Georgia, we ask for the biographical for all officers and directors who are pretty much directly involved with the day-to-day operations of the administrator. This information gives us a background of the individuals who are running the TPA, because as some of you know, the TPA can make or break an insurance company or any type of business entity really quickly by any type of wrongdoing that they may do. So we also like to look at those individuals, look at their backgrounds, make sure that they don't have any federal tax issues or any type of ongoing court issues, employment issues, anything like that. We don't ask for credit reports. However, we do ask that they provide an investigative background report along with that biographical, and it would include a 10-year check of your work history, your residential history, and your judicial history.
Okay. Is that for all officers, president, vice president, secretary,
Yes,
treasurer, directors, owners? So it doesn't have anything just to do with ownership only, and it actually has to do with those holding a title who may not have any ownership.
That is correct.
Okay. The decision makers. All right.
That's correct.
So we talked a little bit earlier this week about the licensing process for TPAs there in Georgia, and you said it can get a little bit difficult depending on quite a few areas of requirements rather. So can you just kind of talk to us about that, some of the different requirements?
Sure. I've been doing this now for over 20 years, and I tend to run into the same problems, and I always try to instruct people before they send in their information. It's best to ask questions beforehand rather than just send it in and expect me to go along with whatever you send. So the main things that we run into are net worth. We do have a net worth requirement here in Georgia of $200,000 that they have to meet, which is sometimes difficult for startups.
Right.
But we do ask for any type of bank information or balance sheet or something that we can kind of help them to get started here in Georgia. So we do work with you on that. The other issue has been the bond and Eno coverages. Here in Georgia, the regulations and the laws are very strict as far as the cancellation notice and language. It has to be specific to Georgia with a 30-day notice of cancellation for the bond and a 60-day for Arizona emissions policy. What I have found probably over the past 2 or 3 years, a lot of companies include the word endeavor within those notices of cancellation, and that has been a problem for us because the word endeavor means that they will try or they will attempt to do something. And because the law is very specific, I can't accept that. We have to be very specific to what's required by our laws and regulations. So we always ask for them to remove certain words as such. But those are probably the 3 main things that I run into where we kind of have to go back and forth on.
Gotcha. Okay.
So I actually have a question for Kristy. Kristy, where does Georgia compare in terms of the difficulty or the ease of licensing for TPA?
Like top 5.
Oh,
Difficulty.
Tammy.
Difficulty.
Why did you call her out like that?
I
That's
kid
gotta
you
be
not.
so uncomfortable right now.
The stack of papers that you send to Georgia is probably that thick. And if you can get a TPA in Georgia, but this is the thing, right? If you can get a TPA in Georgia, a TPA license in Georgia, you got the other states. Because they have by far, I built my TPA checklist based off Georgia. So if you can fulfill my checklist and send me everything that Georgia requires, you get a license anywhere else, because they have the most stringent requirements that they want. Officer biographical affidavits, bonds, your business model or your business plan, all of it. If I can get it for Georgia, I can apply it to the other states. There might be 1 or 2 differences, but Georgia by far.
Telling you, I didn't talk to Kristy beforehand telling her I was going to ask this. This just comes from what Ted and I would walk around our offices and I would hear the grumblings. Oh my gosh, we have a Georgia TPA to file. We got to get a binder. I think in the day we have to submit it in a 3-hole binder, you know?
Yes.
Yeah.
Yep. You had to have each section tabbed out with a cover page on it, which that was perfect because, like I said, if I could get that Georgia completed, then I could kind of model everything else after that.
So what I'm hearing really is that Georgia's the gold standard. I like that.
Yeah.
There you go, Tammy.
It works for me.
There you go.
Ma'am. Yep.
Real quick, before my last question for Tammy about
Yes.
TPA renewals and annual reports, Jeff and Joanne. So Jeff, of course, is with Washington, and then Joanne is from California. And I just want to hear from you both briefly your state requirements or lack of requirements or lack of offerings for TPA, if you could.
Go ahead, Joanne.
All right. Well, in California, essentially the detailed application is going to require all of the officer and director level material. You can apply as an individual, and you can also, they have a resident and non-resident application. So I think absent the biographical affidavits, ultimately the process requires a detailed background check, fingerprints. So I'm going to say a lot of the typical stuff that you would need to do when you're getting a license in the first place. I think we do call it a license, and then you would get a certificate of licensure in the state of California. To the best of my knowledge, no bonds are required, which I would say actually is surprising. But from what I could see, there are no bonds.
Awesome. And then Jeff, Washington is quite different.
We'll answer that question with a question of our own. What's a TPA? Washington currently does not actually license or register TPAs. We have tried to run the model out here a couple of different times and ran into some difficulty with the legislation. I know it's something we have been looking at doing for quite some time. I do want to point out one issue that we come across with TPAs. You have mentioned that TPAs are allowed to adjust claims under a TPA license. If you don't have a TPA license or registration, adjusting claims in our state requires an adjuster license. So you have to be very, very cautious in the states that do not have TPAs, what boundaries you may be crossing by the things that are allowed in the state you're licensed in.
Yep.
And we've gotten that feedback from quite a few states. If they don't offer the TPA license, many of them say you need to get an adjuster license at the very least.
Yep, for sure.
Yeah. Tammy, back to you, and this has to do with the renewal process. So some states require a renewal, and then they also require an annual report. You and I've talked. Yours is handled basically, I guess, together in a renewal application. Is that right?
Yes, that's correct. This is known as an annual renewal.
The annual renewal, and it does kind of already encompass the annual report too.
That is correct.
So that's good. That's good. Okay. So, you know, for our listeners, several states, that's a wholly separate process. Kristy, you may be able to talk more about that, but there's a renewal, a TPA renewal, and then you may have a separate TPA annual report that aren't even due at the same time.
Yes, that's 100% accurate. There's several states out there right now that you do your annual renewal and then you turn around months later and do your annual return. And some of them are combined, like Georgia, which makes the process so much easier. But, you know, each state, you know, they do it different.
Everybody's different.
Everybody's different.
And Jeff says, what's a TPA?
Yep.
Okay, so I've got to keep us on time here. We're doing well. We're 15 minutes in, and I'm ready to move us on to RPG. Are we good with that? Everybody ready to move on from TPA for a little bit? Tammy, you're not off the hook because I still have questions for you later on.
Okay, thank you.
Yes, ma'am. Okay, RPGs. We're going to be talking with Robert Tomilson today about RPGs. And Robert, if you could just kind of give us the broad definition of an RPG, and then I've got some questions for you.
Okay, very good. An RPG is a creation of the 1986 Liability Risk Retention Act. That's a federal piece of legislation. It itself was a product of the hard liability market of the 1980s. And that act, the Liability Risk Retention Liability Act, created two liability entities that were new to the industry. One is the Risk Retention Group, which probably a lot of people that are listening in will know about and are familiar with. And the other is a Risk Purchasing Group, which is probably a little more unfamiliar. They're both meant to do the same thing, which is to provide liability insurance at cheaper rates. The Risk Retention Group, as you know, is unrelated businesses with similar liability exposures coming together to self-insure. They underwrite their own claims, they pay their own claims. They are, in essence, an insurance company, a captive insurance company. They often get excess on top. Risk purchasing groups are very unfamiliar and are not frequently used, and I'm not sure why, because it's an ingenious creation. And what it is, it's a creation that has to be done by a broker. In other words, the broker has to be the head of it, has to be a member, a licensed broker. And what you do is you create an entity, an LLC, a LLP, and you have policyholders join. Again, unrelated businesses with similar liability exposures. They join the group. And the head of the risk purchasing group, who's also a licensed broker, goes out to purchase liability insurance on a group basis for all the members.
Yep.
And in essence, by bringing all those policyholders together, the hope is that you get a much cheaper rate.
Right.
That's in essence what a risk purchasing group is.
Okay. You mentioned you form an LLC or a corp. Have you ever seen an unincorporated RPG?
I have not.
We had one, and man, that was. Do you remember that, Kristy? They were unincorporated in Illinois, and we were trying to get them an RPG. I think in
They were no profit. They were nonprofit.
But
the thing is, when they came to us, they told us they were for profit. So when we did the registrations at the Secretary of State, we completed the forms as a for-profit corporation. And then I would say 8 or 10 years later, they came to us and they were like, why do y'all have us down as a for-profit corporation? And so, of course, we retained records and we sent it to them and said, look, when you completed your data form and onboarded with us, you put your for-profit corporation. And the guy was like, but we're not. So we had to go back to each of the Secretary of States that we registered them and correct that. And Illinois was like, but you're a for-profit. You have to have shares oh, it just slipped my mind. You're starting revenue. And we're like, but they're a nonprofit. They don't. In Illinois, I know it took 2+ years to finally file that registration and get them to comprehend that they were a nonprofit. They didn't have any starting capital. They didn't have any shares. And we finally got them switched over to a nonprofit.
Wow.
It's such a good point to bring up, right? Because
Yep.
just getting those initial paperwork in, you have to be clear like what your entity is.
Yeah.
And it's so easy to say, yeah. And no, we have to ask those questions. Like, are you sure?
Yeah, for sure. Because we can do a whole lot of work real fast and it'd be wrong.
Be a whole lot of damage real fast, you mean?
Yeah. Luckily, for us, we were able to show that the client came to us and needed it that way, and that's how we proceeded with the work. But yeah, we can do a whole lot of work real fast and it not be right. So
if they give it to us wrong. And I do remember that one. That's still not the one I'm talking about. This other one, this was a nightmare. I should remember their name, but I mean, I wouldn't say it anyways, but I can't.
Yeah.
I can't remember their name, but it was.
I'm sure I know which one you're talking about now.
I think they were Illinois. They tried to relocate to California, but they wanted the RPG in Florida. And it was a nightmare because we couldn't prove really the existence. There was nothing to give. There was no articles. There was nothing to provide. It was just wild.
Yeah. That's when we have to send it to Robert and say, hey, can you clean this up? Because we don't.
Oh.
Throw the football.
Yeah. So Robert, question for you. Are there more, is it more advantageous for InsurTech startups or the traditional brokers and MGAs?
So I do a lot of work in Silicon Valley, and I've helped a lot of startups. And I've often discussed RPGs and risk retention groups and all sorts of ideas with a lot of these brokers out in San Francisco. And while they find it fascinating, it rarely fits with, they usually are coming to the business with some unique technology, and so it doesn't fit with what they're doing. For traditional brokers, it seems to me to be a no-brainer. It's a real easy way to capture a big piece of the market and to retain that market, because you're going to be offering cheaper rates. At least in my experience, they've been able to offer rates that are cheaper in discount or significantly cheaper, so that it is readily recognizable by the policyholders, so they immediately join on. So it's not, it's not 0.5% or 3%. It's a real discount, and that discount can really be reflected for the policyholder, and they instantly join the group, and they'll stay with the group for that reason.
Are RPGs a growth industry?
To my knowledge, they're not. I don't see them out there. I talk with people about them. I probably go to a dozen insurance conferences a year. Mm-hmm. And inevitably, I will bring up risk retention groups at some point in conversations I have with people. And these are people that are underwriters, actuaries. They've been in the business for 15, 25 years. They don't even know they exist. And then oftentimes they say to me, it can't be that easy. And I say, actually, it is that easy. It really is that easy. This is what you need to do. I'll give you, because I know I gave you the definition of a risk purchasing group, but it may be helpful just to give you an example of a risk purchasing group that I created and how I created it. Because it gives you a little basis to how you might do this if you're an individual broker. The very first one I created was an MGA that wrote a lot of home inspector liability, Eno and CGL. And they had about 2,000 of their policyholders in an association. It was a Home Inspectors Association, a national association. The association had about 18,000 members. And they had written those 2,000 policies on an individual basis in almost all 50 states. They managed them individually, they underwrote them individually, they paid the claims individually. And they came to me and said, can't we do a risk purchasing group? I said, you can. And so I created it. And what they did is they went to the association and they said, we want to be your sponsored MGA carrier for home inspector liability. And they did that. And they entered into a marketing transaction with them, and they sponsored them. Within a period of 3 years, they tripled their business. People would go to the site, they'd go to the home inspector site, the association, and it was one of the offerings. You'll see this a lot if you go to an association. Frequently, there'll be lists of different types of insurance for that industry. Usually, that association will simply charge the MGA or the insurance carrier for being on the website. That's all they do. This was very different. The association's home website had a link that said, this is our sponsored MGA carrier for liability. And so people would go to the link, they'd click on it, and within a period of 2 or 3 minutes, you could find a price for your liability insurance, and inevitably it was cheaper, $200, $300, $400, $500. The reason this is important, why the risk purchasing group is important as in comparison to a risk retention group. Risk retention groups tend to have large business entities that have big insurance bills and heavy claims. What we're talking about here, think about the home inspector business, for example. These are tiny little LLCs. There's maybe 1 to 3 employees. They have a very small P&L, and their liability insurance might be $1,500 or $4,000. And so that discount of $500 could be very significant. They have no way of getting a cheaper rate or they have no leverage as an individual policyholder. If they join a group of 8,000, suddenly they're in a position to get a much cheaper rate. So I think it makes sense for everybody in the chain. It makes a lot of sense for the association, who usually gets a marketing fee. It makes sense for the brokers who easily acquire and retain policyholders. And of course, it makes sense for policyholders because they pay less for liability insurance, which is the point of the act.
You're stirring some stuff up, so I've got some things coming in through the chat right now. One, what's the advantage of forming an RPG versus a captive? And then right behind that, RPG sounds like a great vehicle. Why don't we hear more about those? I hear more about captives.
Yeah, so captives are just, they're insurance companies, right?
Mm-hmm.
A captive is an insurance company under state regs. You can self-insure. And the risk retention group is a particular type of captive. And that allows unrelated entities who have similar liability exposures to come together to self-insure. That's a different prospect. You've got to put capital out. You have to be willing to lose capital. Again, it's usually businesses that are of fairly good size. Let's just say small to middle market. What the risk retention group, I think, is really good for, it can capture almost any size business, but the one that it makes most sense for are freelancers, consultants, individual LLCs. These are people, you go out, you try to get a liability policy for a home appraiser. Let's say you're a home appraiser, you already just appraise homes. You know, your insurance is probably $1,500, $2,500 a year. There's no underwriting of that policy. You just put your name in. If you have no claim experience, and they just shoot the policy back to you, and you can price compare like you can with auto. But if you join one of these groups, it could really make a difference. But you have, as an individual policyholder, it's your only way to gain access. Why don't we hear more about them? You know, they have to be started by a broker. A broker has to take the initiative. In the case that I gave you, which was the very first one I created, they did come to me. And the MGA that had been writing the business for the individual policyholders became the principal in the risk purchasing group. So he was on both sides. He was purchasing the insurance for the group, and then he was underwriting and closing the policy with the carrier. I think you had 2 questions, but I think I only answered one.
No. In fact, I think it was the same person, and it was both like, why don't we hear more about this? Robert, I am going to actually share your email address with them because they've got more questions for you. And I know we've got to move on to MGA here pretty soon. So it sounds like they've got got a good bit of questions, and you've got quite a bit of information to share, if that's okay.
Well, thank you. Yeah, I'm happy to speak with them.
Absolutely. And we share all the panelists' information after the webinar is over, right, Ted and Arlene? We'll send it out.
Yes, for sure. And Joyce, before we move on to MGA, I have a question for Kristy. MGA, TPAs, RPGs, how does that process of getting those licenses, those registrations compare to PNC and life and health?
MGA, TPA, and RPG are by far like big, ugly monsters compared to your standard PC, life, accident, health. We can do the majority of those like through electronically. They're issued in a few days. Sometimes, yeah, sometimes it might take a couple of weeks to get those licenses issued. TPA, MGA, RPG, they're higher risk. There's so much more supporting documentation that has to go with those applications. You know, like I mentioned, Georgia's that thick. It's the same for the other states as well. There are a few electronic RPG TPA states, but for the most part, it's paper. It's labor intensive. The review process at the DOI is a lot more strict. You know, we can submit an application to Tammy, and you know, her review process might take a couple of weeks to get through because it's just that much documentation that has to go. And if she finds one thing wrong, she's sending that application back to us, and you know, then that review process kind of starts all over again as well. So they are much more labor intensive than the standard, you know, producer licenses, agency licenses.
But lucky that we've been doing this stuff for quite a bit of time, over 20 years.
Yeah.
And over that time, we've streamlined the process. We have all of these training manuals for our people, and we have these guides. And I want to talk to you guys today about some of the guides that we've put together and how closely held they were. And what was your opinion, Kristy, about releasing guides to folks out there?
Or mute her, Ted.
No.
You want me to tell you what I thought about it?
No, we're not going, we're not.
So anyway, we have these guides that we treasure a lot. And we have obviously clients that, not clients, but folks that will call us from around the country that the services that we provide, sometimes because of budgets and whatnot, it's not a good match, right? Like they can't afford our services. And unfortunately, that was the end of the conversation with them. And we would say like, well, how else can we help these folks? The same thing with big companies. They're with us for several years. And after that, it just doesn't become sufficient to stay with us.
Mm-hmm.
But they would just say, Kristy, can you have your team come up and train us? Or Kristy, can you give me some guides? Can you give me some guides? And we'd be like, no, we can't do it.
We don't sell our guides.
But guess what? Russ, now we do have guides that we are going to be releasing to folks just to be able to serve those companies that are smaller, those companies that are bigger. So we're going to give you guys a sneak preview of what the guides are shaping out to be. We're super excited about them. This is Russ, take it away.
All right, now let me give you a fair warning before we get the screen share going here. This is a prototype. It is not ready for production yet, but it's got all the elements here. They're all hooked up. And I'll also warn you that I am a plain Jane, vanilla ice cream, Times New Roman kind of guy.
Yeah.
So everything that you see here is the working prototype, but it will be pretty and nice once we get it to the developers. So as you heard, our managers and supervisors were very reluctant to put this stuff out on a subscription service. But if we're going to do it, we're going to do it right. I think I got threatened by several different people that if this goes out here, it's got to be right. So we've spent a lot of time on that. And that's what we're still working on, is making sure that the guides are complete and that they're understandable. But basically, a subscriber to our guides portal would come to this screen. This will give them the options that they would have available to them with their subscription. So obviously, the most important thing would be the compliance guides. So if we go there, you can see we've got a list of licensing guides. That's very extensive. Corporate registrations and filings. And then we have specialty guides grayed out off there to the side. We'll come back to those later on. When we get this finished up, the users will be able to have a tutorial here that would explain some of the more esoteric, I guess would be the best word, guides, because some of them, even the ones that we consider to be straightforward. If you haven't done this before, good luck. So they're going to need some help. So that would all be available. Just to pick one. So a pretty simple one here, corporate property and casualty licensing guide. Per state, it's going to tell you what the basic things are that you're going to need. Any specialty notes, any instructions would be in these boxes here. Then, of course, that goes through that whole range. The same thing would happen with corporate qualifications, surplus lines tax filings, which is a big old honking guide. It's going to take too long to open up, so I'm not going to do it. So that's what would be available with a regular subscription. If you choose to get something special, like say, I don't know, TPA licensing. So all of this stuff will be available a la carte. So if you don't want all those other guides, you don't have to have those. And then last but not least, what were we going to ask, Arlene?
Oh, no.
Okay, so along with this, we know we can't keep track of all of this stuff without our extensive proprietary databases. We ain't selling that stuff. But we have created a tracking setup for the subscribers. So they've got a basic setup for their corporate entity to track their licenses, shares, all the stuff that we talked about that you're going to have for some of the specialty licenses. And then we also created a tracking system for agents. So you can track their licenses, appointments, affiliations, all that stuff. So these are provided empty. The client would supply this information and they'd have it available to take care of their needs. So that's what they get. But in addition, if you have an agency management system, something like that, where you want to import data, you can bring that in through our template that's supplied with this, so you don't have to go in and type everything in manually. And of course, if you're running into problems, who are you going to call?
Kristy.
There you go.
She loves filling out license applications.
Yes, I do.
So we have links on there to ask ILSA for help, either with something in particular or something in general. And we also have a contact set up for our agency, our regulator contact information on the webpage. So that's a really, really, really quick look at it. It's still a little raw, but it's coming along.
Yeah, it'll be a while before we deploy it, but we're excited about it.
All right.
And that's where you'll have all of your specialty license guides will be in there. Whew.
Back to Joyce.
Back to Joyce, and I think we're about to jump into MGAs. So.
We are going to MGAs, and we're going to fly through a little bit of licensing stuff, and we're going to round out our conversation today with John Moskal, who's going to talk to us about why technology is so important to MGAs. But first, real quick, Joanne, I'd like to pick on you for the definition of an MGA. We started all of these topics with a basic definition. This one's going to be no different.
Oh, mute.
You're on mute.
Self on mute. So basically an MGA is what we would call a managing general agent. So they are going to be working specifically with a carrier, right? So it's really, it can be a person, it can be an agency, so it could be an entity or an individual who's going to be negotiating, binding, reinsuring on behalf of an insurer. And they may manage all or part of the underwriting or the insurance business, would potentially have some binding authority. And then really, I'm going to say the distinct difference is that they're not considered an employee of the insurer, but because they have a binding agreement with that insurer, may be subject to additional taxes and fees. So I know depending on the state, all states kind of have different rules about which fees they tax and which fees they don't. And because an MGA is working in alignment with an insurer, some of the interesting parts, at least in California, is really that question of whether or not those fees are taxable. And when there is a binding agreement, essentially California considers the fees subject to surplus line tax and the stamping fee.
Awesome. I want to ask Jeff right now. So in our experience, if someone comes to us and says, I'm an MGA, I need to be MGA licensed, and everybody thinks it's just so simple to run out and grab a bunch of MGA licenses, which it's not, for several different reasons. Not every state offers an MGA license. Some states offer an MGA appointment. Jeff, you're one of those states, right? And all states have some sort of minimum requirement that you have to meet. But I do want to start off with Jeff, and if you'll talk to us about Washington and what it takes to be MGA compliant, I guess, in Washington. What are the requirements there?
Certainly. As Joyce had mentioned, in our state, it's not a license. It is in some states. Other states are like us, where it's an appointment. So our requirement is, if you have an MGA contract with the insurer, first off, you have to qualify to actually be an MGA in our state. You have to be writing at a minimum 5% or higher of the insurer's premium in that state. If that's the case, you qualify for it, and the insurance company actually has to appoint that business entity or the individual as the MGA. So again, you have to have the underlying producer license either as the individual or as a business entity, and have the MGA appointment. We don't care what your contract says. If you're acting as an MGA in our state and you don't have the appointment, you're going to end up in our legal division and face some pretty heavy fines and penalties because you are acting as something you're not registered to be in our state. Also, somewhat of a surprise, and we found this out on a compliance project a few years back. Our statutes require that the insurer do 2 audits per year on their MGAs. So we said, here's a great question for the insurance companies who have MGA appointments. We want to see last year's 2 audits on all your MGAs. Right away, our MGA list went from 80 to 40. Everybody canceled them because they hadn't done it, and B, they probably still weren't meeting the 5%. So that is a requirement in our state, that if you qualify in writing 5%, you have to maintain that. It's not like it can drop below. If you drop below the 5%, you're not qualified to hold the MGA appointment in our state. And yes, we've gotten very routinely to asking insurers for their biannual audits on their MGA appointments.
Wow.
Nice. I like it.
So I'd like to ask you a question on that. From your previous role, have you seen many states that have that, where they're going in twice a year to do those audits?
I'm not sure exactly what the other states that have the MGA appointment, what their statutes actually require of the insurer. I would have to do a little homework on that, but I know in a lot of states that have the license, that they're on the renewal, you have to submit a lot of things with that to make sure that MGA license is still valid. That you meet all the qualifications that are put forth by the state. But I'm not sure exactly how many of the other states actually require the 2 audits per year.
Joanne, did you have that? Have you had experience with that previously?
I did. So I'm going to say, like within California, California also has the 5%, and maintaining that 5% of the written premium. We also have a books and records regulation, which I would say was consistent. So when I was on the brokerage side, we were licensed or appointed as an MGA in many states. And in order to maintain that, what we did is we standardized how our carriers kind of treated MGAs. So in terms of the 2 audits per year, that was a standard operating procedure regardless of state requirements. So again, I'm kind of mixing the two, but as a broker and being licensed as an MGA, we were subject to those, and then really working on behalf of the carriers and the carriers owned by the company, we implemented a program that kind of applied a standard procedure for all of our MGAs that we were going to appoint. And that was so that we could stay on top of the varying requirements. So again, going with those stricter requirements put you in compliance everywhere. But the books and records, there are claims which may also need to be looked at as well, because there's some adjustment requirements as well within those agreements.
I have a couple of questions to ask our regulators. And Jeff, we can start with you. Can one register as an MGA or MGU appointment without a contract or relationship with a carrier, or be a startup without the 5%?
On the 5%, that answer is no.
Okay.
And since it is an appointment made by the insurance company, I'm not aware of any relationships with insurance carriers where if you don't have that relationship, you can get the MGA appointment. It may be different with the states that actually issue licenses, but for the appointment, that actually has to come from the insurer, so that relationship would have to be there.
A lot of the states, even though it might be an application process, we still have to send in notice of appointment from the carrier.
Or the contract, or copy of the contract.
Yep.
Yeah.
Yep. In some cases.
Okay, so probably not any state that you're really aware of that you could get around that.
No.
Yeah. And Joanne, you agree on that too?
I do. The appointment's critical, and you really can't get the appointment without the relationship.
Right.
Yeah.
Unless you know someone. I mean, there's other ways around it, but it's pretty difficult.
Yeah, and I don't know why you would want to go through that process if you're truly not doing the 5% for the carrier. You're not going to be, well, you might have the revenue stream, but it takes a lot of money. It takes in not only the application, but your bond premiums are a little higher than your normal bonds would be for like California or you know, for your surplus lines and stuff like that. So if you're looking at getting MGA in all states, you're going to be, you know, there's probably 15 states that require a bond, and those bond premiums are going to be outrageous. So you're looking at a lot of money to get in to be an MGA, period. And if you're not seeing that, then that's, you know, kind of wasted money, if you understand where I'm coming from.
So
could I jump in on this?
Yeah.
Just only because I actually have litigated this issue, the question of being an MGA. I had a client, different state, not Washington, not the states that you have there. And I went through that statute, that comes out of the NAIC statute, the 5%, it's excess and surplus of the carrier's revenue, which is an enormous amount. If you're dealing with Travelers or AIG, you wouldn't be able to be an MGA.
Right.
Huge. What I argued to the department was that licensing for MGAs and the 5% minimum was like a SIFI. It's a threshold requirement. In other words, you can do whatever you want by contract, and they did have an appointment by contract that said, you're going to underwrite the business, you're going to bind the business. They didn't collect premium, but they went out and they wrote the business for about 4 or 5 carriers. And they said, why don't you have an MGA license? I said, we don't need one because we don't write 5%. Because at 5%, you now are causing a potential harm to the carrier and therefore the policyholders in the state, because you're writing so much, you could upset the carrier. They bought that. So I was, we were able to, we didn't get licensed as an MGA. We went without any harm or any penalty. That's in a totally different state, but under the same similar language about 5% and MGA licensing. So our guys were just licensed as producers. And what I said is by contract, they could do the other stuff that they needed to do.
That's really good information.
Yeah.
Excellent point, Robert.
Absolutely. So Washington, the 5% applies. I looked up Florida, the 5%. I looked up Nevada, the 5%. So quite a few states have that same minimum requirement. But then there's Georgia, and we have Tammy Brewster here from Georgia, who I said I would pick on, and now I'm picking on you. Talk to us about MGA in Georgia. Or is there MGA in Georgia?
You're muted.
Oh, you're muted.
Sorry, the actual MGA requirements for Georgia, the regulations haven't been approved yet. It's something we've been working on for quite a while. We do have a law for it, and it also does include that 5% also once it's approved. However, at this particular time, you have to go through the agent licensing division, make sure that you have your agent or agency license, and abide by all of those laws and regulations. But there is no MGA per se law that's regulated right now here in Georgia.
No law, no license, no appointment or anything like that yet.
That's correct.
But it is coming.
It is. I have it on my books. It's ready to go. We just waiting to get the regulations done.
Awesome. Awesome. Okay. I want to move on quickly unless anyone else has questions about the licensing process. Here comes another Q&A. Sorry. This goes back to the previous questions about can you register as an MGA or MGU without the appointment or be the startup without 5%. Here's another question that goes with that. Is that for an MGU who is not captive, like an MGA to one carrier? It was the same person, and they just asked a third question, so it was just a continuation of the two previous questions. Let me get some more context. Sorry. More info. Okay. Real quick, we're gonna move over real quick. John Moskal has been so patiently waiting for us to get to him. Thank you, John, for being with us today.
Absolutely.
And we want to talk to you about how technology is so important for MGAs. Go ahead.
Absolutely. And thank you for having me on the panel this afternoon. I think Robert brought some light to that earlier when he brought up the InsurTech, I guess what now they're calling InsurTech MGAs or InsurTech insurance companies. You know, it boils down to a couple things. One is, you know, MGAs, since they operate almost identically to a carrier, and actually, as we've talked about today, they really carry even more responsibility because they're interacting with the primary carriers, or who would be the fronting carrier, and then all the other entities that they're connecting with. So the things that we feel are important for the MGA is that they need to be able to obtain data from their insured. They need to complete advanced reporting for internal use, and reporting becomes really important. The majority, I would say, of starting MGAs in the market are really taxed with Excel spreadsheets and all the other, I guess, manual processes, and carriers are not happy about that because they really need that data. They really need the information, especially from a reliability standpoint. The other thing is that they need to complete in-depth audits in order to provide that information to their carrier partners. They need to generate and compile all the necessary documents. So they need to have a place to store that information. And then since most of them are, as we talked about today, I wouldn't say most of them, but you've got everything from a startup MGA to the larger MGAs. They all have a need for basically print distribution. So they either do it in-house or they need to rely on an external source or an outsource environment to do so. So, you know, those are what we see as the primary 5 reasons that technology is really impactful for an MGA.
Gotcha. And talk to us about how you find MGAs to work with or how they find you.
Yeah, well, actually, Robert also brought this up earlier. Associations are probably the biggest market because you've got the WISA, you've got what used to be the AMGA, you've got target markets. I mean, you have specific associations that really wrap themselves around that market. You know, we as a technology company also do quite a bit of outbound prospecting. So, hitting all the media sources, Business Insurance, Insurance Journal. I mean, they're all loaded today with, just a number of companies' activities. And I mean, today, I've been doing this for 30 years, and I'm telling you, M&A activity is higher than I've ever seen it, especially over the last 8 months. It's crazy. So,
Yes.
there's a lot of information there. And then we're fortunate. They do come to us. I wish more often, but either through partnerships that we have with reinsurers, or maybe a reinsurer is looking for, a strong relationship with the MGA to provide that type of business. So they do find their way to us as well.
And John, I don't know if you're aware that we're right now simultaneously running a 3-part webinar on M&As, because there's so much activity, like you said. And
Yeah.
so we just had our first one last week, and I think we had like 9 panelists, and the next one is going to be October 15th.
Should be next week.
And then the following one is going to be October 29th, I believe. But yeah, we have so many great panelists on that. And yeah, even through COVID, we've seen so many transactions taking place.
It's interesting, Arlene, that you said that, because actually one of the, I don't know if it was yours or not, but I was on an M&A webinar, and there were 3 MGAs that were part of that audience. And actually, one of the pieces of information that came back from them is they said 2 of the major differentiators of MGAs who are competing effectively are, first, that they have to have innovative technology that brings real differentiation to the program, and second, that their technology integrates with the carrier system and vice versa. And, again, I mean, that's really become, from the companies that we've talked to, even startups, that are being spun out of, like, the big companies, the IGs, et cetera. I mean, those guys, they've got to come to the table with some essence of technology knowledge.
So that's really interesting. It's kind of like a segue also to our M&A one, right? Like, if you're in there that you're planning to sell in the future, or you're planning to, be part of a bigger company, it's so important, the platform that you have, and how you can get your data, and how you can get it to the carriers, and how you can get it, get your audits done in an efficient manner.
Absolutely. And again, I think the other thing that most companies don't talk about, but when we get in conversations with them, I mean, they don't typically have a staff. So they've got, maybe 3 or 4 people in the company that are trying to do what they need to do. But, I mean, they shouldn't be taking customer service calls. I mean, they shouldn't really be doing all that level of work, because they're trying to sell. They need to make sure that the brokers or agents, whoever's out there selling for them, that they're doing that. And, we're fortunate that we do provide that as an additional means of our solution set. So that helps.
Awesome. And I know we're getting within 3 minutes of our time to wrap it up. I have a question real quick for Tammy from the Q&A, but also, John, you're with WaterStreet. You have a solution.
We do.
Yeah, absolutely. And I hate that we're running out of time and we can't really get into it, but we want to make your information available to all of the attendees and all those who are going to catch this on YouTube after the fact, so that you have an opportunity to speak with people who may have questions about your solution.
Absolutely. That'd be great.
Thank you. And sorry to circle back to you, Miss Tammy, but
Yes.
this question is for Georgia. In Georgia, when an MGAs are accessed by other producers, are the MGAs then regulated as surplus line insurer or as a producer?
From my understanding, it would be as a producer.
Producer, and that's what I had taken it to mean as well. Okay.
Hey, Tammy, shout out to Georgia. I'm actually live in Atlanta, so.
Oh, okay.
There you go. All right. Ted and Arlene, did y'all have anything else?
Yeah, actually. So you guys see this. This is Spot On Insurance. For those of you that don't know, that are attending today, Spot On Insurance is about, we're building online courses, compliance courses, and we'll have those very, very shortly to everyone. But we also have podcasts. That's like the bread and butter of Spot On Insurance. And the podcast is listened to in over 110 countries by thousands of insurance professionals. So check it out. You can find it on Spotify, iTunes, Stitcher, wherever. So, you know, besides doing the online courses, of course, we do these webinars, and the podcasts are a great way. I know a lot of you have been on there or listened to it. So just wanted to remind everyone about that podcast.
Thank you.
You know what? Let me ask you real quick. I'm sorry, regulators. I do have a question for you. So someone says that I see state applications all the time for MGAs, but not really MGUs. Is it basically one and the same?
California does not recognize an MGU.
Okay.
So you have to be
Likewise
an MGA.
Likewise for Washington.
Okay.
We don't have a definition for MGU either.
Okay.
Isn't an MGU usually an excess and surplus lines carrier, or do they go by a different title? Don't know.
No,
I don't
I don't think.
Typically an MGU is associated with the life and health space, because actuaries really run life and health business. On the P&C side, it's really the underwriters that write the business, and they're the ones that know what's going on. It's just a term of art. They're MGAs.
Gotcha.
Right. And for excess and surplus, there are states where you can be an MGU. I don't know the full list of them, but I know that we were an MGU in certain states on the excess and surplus side, but primarily it's MGA.
Got it.
Good
Thanks,
to know.
guys.
Man, awesome, guys. Another valuable webinar. Thank you guys for joining us, our panelists, our regulators. You know, we appreciate this. It's so good during these times to just see faces and to, especially I think for our attendees, to get to also see the regulators and just hear things directly from their state and just see, you know, we're all humans, right? So thank you, guys.
And a special thanks to our team members here who really have, I mean, we started this
In
this
March,
year,
yes.
and it just keeps getting better, and they keep getting better at it too.
Yes, so thank you, team.
Very good, very good.
Yeah, fantastic.
Thank you,
Thanks for
thank
having
you.
me.
Very
Thank
good.
you, everyone.
Bye-bye.
Bye-bye.